Hey, what's up guys, John here. Wells Fargo becomes the first major U.S. bank to go on strike.
Another major U.S. company is facing unionization efforts from its workers.
Workers at a Wells Fargo branch in Albuquerque voted to form a union, becoming the first ever Wells Fargo workers to unionize.
Now, strike is a word you've heard many times this year. Kaiser, for example, over 80,000 employees, they had a massive strike.
75,000 healthcare workers are kicking off a strike against Kaiser Permanente.
The UAW strike impacting all the auto workers. That happened this year.
The United Auto Workers Union is going on strike against the big three U.S. automakers.
Even the airlines, you've seen some of the biggest names in aviation going on strike. Over 450,000 Americans went on strike so far in 2023. But when you look at what's happening inside of banking, what I believe is a staged demolition of the entire banking industry, you are going to see something very, very clear. You're going to see what's going to happen next. And in this video, I'm going to break it down for you. I'm going to show you exactly what I believe is coming very, very, very soon. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about the U.S. economy. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free strategy session. Take a look at this. So, workers at Wells Fargo branch become the first at a major U.S. bank to unionize. Now look at this. Workers at Wells Fargo, Albuquerque, New Mexico voted to unionize on Wednesday, the first such vote at a major U.S. bank branch. Our victory today is the first of many to come. Workers at the branch are seeking higher wages, better benefits across the company. They're also hoping to push back against branch closures and what they said was rampant understaffing, low pay, and mismanagement. So, when you look at what Wells Fargo CEO said roughly 1 year ago, January 13th, 2023, Wells Fargo CEO Charlie Scharf aims to cut billions in more expenses in 2023. So you have to ask yourself, what are the odds? What are the odds that he wants to cut all these expenses and all these employees now are saying, hey, look, we want more money. We want you to incur more expenses. Or do you think this whole thing is staged and what they really want to do is be able to release thousands of employees without having to pay them severance and paying them all these packages? No, that's probably not what they want to do. They want these employees to walk away, and then Wells Fargo says, all right, thanks, see you later. That's what they want. They want to be able to walk away from all of these employees. You might say, John, that's not going to happen. Hold with me for a second. So Wells Fargo warns of severance costs up to $1 billion December 5th. That was, 10 days ago, 15 days ago. Look at this. Now 15 steps to the unionization of banks and credit unions. You have to ask yourself, are we walking into a situation where they want all these banks and smaller banks and credit unions to unionize so then the big companies can come in and do M&A, mergers and acquisitions, start acquiring them and acquiring their entire customer base and essentially taking over the banking industry? I mean, might be far-fetched, right? Maybe. Well, banks eager to resume M&A predict wave of consolidation. This came out last month, November 6th. All right, well, let's see where this goes. There's only one way forward for small banks now, consolidation, right? This came out this year. Now, banks, they laid off 20,000 employees quietly. They quietly laid off, this is their words, not mine, quietly cutting 20,000 employees. You're like, all right, that's a pretty big number, right? October 19th, 20,000. Now Canadian banks announced layoffs adding downtown Toronto. So this isn't just America. This is that's today, December 21st. Now Canadian banks are doing the same thing. All right, well let's look at what's happening on Wall Street. Let's look at what's happening with all these other financial firms because they're all doing the same thing. They're all moving into this one direction. Wall Street banks shed jobs to ease cost pressures. This is October 25th, so 6 days after this came out. Then you have Bank of America cutting 7,500 jobs. You have TD Bank cutting 3,000 jobs. You're like, all right, well, Citigroup, for example. Citigroup, they're cutting 10% of their staff, 24,000 workers. This came out November 6th, right? So this came out roughly 15 days after this article. You're like, all right, well, so you go from 20,000 to now 50,000 jobs in the course of, 45 days. You're like, all right, well, let's see what the CEO of Citigroup is planning, right? Jane Fraser, right? And where she's planning the 10% job cuts across her 290-something thousand employees, 294,000 employees. And what she said is the bank touts her achievements to date as including the launch of multi-year strategy to increase Citigroup's profitability and better position the firm for the speed and complexities of the digital age. Now, what that means to me is AI, technology, data. That's what that means. That does not mean that they're going to be able to increase their profitability by hiring more employees. So what is going to happen? We're going to see a situation where we're going to go from 50,000 bank jobs gone to 150, 200,000, 250,000 jobs, where we're going to see these large banking behemoths start to move in M&A, acquiring a lot of these smaller banks, letting go all these employees, and then using generative AI to streamline this whole entire thing. Now look at this. S&P Global, right? October 31st, came out a month and a half ago. AI in banking. AI will be an incremental game changer. I agree. Banks are adopting generative AI, which promises earnings growth, improvements to decision making, and better risk management. But it also comes with new risks and concerns and costs that banks will have to manage. We believe testing of generative AI solutions will accelerate over the next 2 to 5 years, while benefits are likely to prove incremental. Banks that successfully deploy AI could benefit in capabilities and efficiencies that lead to competitive advantages and differentiation. This may eventually have implications for our views of creditworthiness, primarily through 3 areas: business franchise, financial performance, and risk management. Now, I've been talking a lot about making sure you're in a position to where banks will want to lend you money. Because what I believe is going to happen is AI is going to play such a major role. We're going to see a situation where the credit tightens up, a lot of banks fade away. There's going to be, a handful of really, really big banks. They're going to still need to lend money, but they're going to be extremely careful on who they lend money to. And so when everything runs into AI and it's no longer about the connection with the bank teller or, that long-term business loan you had with this bank where you paid every single time, you made your monthly payment plus some, you were never late. It's not going to come down to that. They're going to look at who you are as a borrower, what type of risk they take, what the outlook is on your business, your industry. They're going to look at all of this, and then they're going to either give a thumbs up or a thumbs down on if they're going to give that loan. Given banks' material investment capacity, management of large amounts of proprietary data, and often fluid business models, it was perhaps inevitable that they proved to be enthusiastic early adopters of machine and deep learning technology, so-called traditional AI. These systems have for decades, in fact, been used to improve risk management processes, loss mitigation, fraud prevention, customer retention, and to deliver efficiency gains and profit growth. Now look, AI in banking in a nutshell, and they go on, they show you exactly how this whole thing is going to work, right? How they're going to streamline this entire process. It's really fascinating how fast this train's moving, right? How fast this train's moving. They're going to be looking at risk management enhancements with regards to credit market, operational risk, right? AI in banking is not new, but it's changing, and they'll show you, banking, finance, insurance, and among other big users of machine learning. It's all moving in this direction. Some of the biggest banks, though, like Barclays, they just laid off 2,000 employees a couple weeks ago. Banco Standard, Bank of America, Discover Financial, all moving in this direction with generative AI. Wells Fargo, same thing, right? I mean, Morgan Stanley, Goldman, JP Morgan, all going to be moving in this generative AI. They don't need all of these employees. They don't need them, especially today. The amount of money people want to make, banks are looking at this saying, you know what, no, I'm not going to do this. I'm not going to do that deal. I'm going to streamline this in better process. I'm going to be able to reduce my overall overhead. I'm going to make this business more profitable, and I'm going to do this with less employees. That's what's going to happen. We're going to start seeing more and more and more banks close down nationwide. Over 3,000 bank branches have closed so far in 2023. I think that number is only going up in 2024. So look at this. This is one of the big things, environmental costs. Everything is going to be about that coming very, very soon. AI strategies' potential effect on bank creditworthiness. The banking sector is a regulated service industry that relies heavily on technology. Banks' ability to design and implement strategies that effectively capture AI's operational benefit could, like other new technologies and potentially more so, have implications on our view of credit quality. This situation is going to ramp up very, very, very quickly. What do you think about where this is going? Do you think that Wells Fargo, this is a real strike, or do you think that this is a perfect scapegoat for them to let go of thousands of employees? tens of thousands of employees possibly. I mean, Citigroup laid off 24,000. Wells Fargo, they have hundreds of thousands of employees. I think they have 200 and something thousand employees, 238,000 employees. If they can let go of 40, 50,000 employees and not have to pay all those benefits, think about how good of a deal that is for Wells Fargo. Drop below. Let's have a conversation about it. And if you want to fix your credit to get in front of this, you want to position yourself, what I believe is going to be a massive wealth transfer. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. We'd love to give you a free strategy session. I just hired 2 new employees. They used to work directly with Equifax doing disputing. So if you have a complicated situation or a situation you want to run by us, schedule a free strategy session. We'd love to see how we can help. Catch you in the next video.